Oh, I bring this back to the question, was yesterday's nightmare, is it now totally over because nightfall is coming in just a few hours? Could this happen again soon? Let's bring in two very seasoned traders. Joining me now live from the VIX pit at the SIBO, Scott Bauer along with Sarge Guilfoyle. Scott, you've entered sort of the mouth of the dragon today, where yesterday the VIX saw something like an intraday spike of 181%, biggest on record, closed at 65. It's all the way down to 25 now. Please explain where all that fear and hysteria went.
Yeah, you had, especially with the VIX, you had just so much short covering from people that were long equities or long part of the carry trade, just clamoring, absolutely clamoring, Liz, because everyone was panic stricken. The fact that Japan fell apart over the weekend obviously didn't help. It didn't help the situation here. So we saw those big out of the money calls. Everybody was clamoring for them. Today, it's a different story, and it's not as busy today. Yesterday was unbelievable. It was like, 2.5 times average daily volume. Today, what we are seeing is the retail and the institutional paper, the ones that were buying up VIX calls ahead of yesterday, the ones that had been long them from 40 strike up to 60 strike, we're seeing a lot of that closing out today. So it's much more subdued today. By no means is this volatility over, but you know what? The market can handle the VIX in the low 20s or the mid 20s here. This is much more normal. Yes, it's elevated, but this is much more normal. This is something the market likes to see.
Yeah, I know. They like to see this kind of bounce, but we've seen bounces after big sell-offs. But the Federal Reserve says it doesn't look at the stock market, Scott. And yesterday, there was, of course, this reaction to Friday's somewhat weaker than expected jobs report for July. People think that that was part of the trigger. Yesterday on the show, we had economist Mohamed El-Erian, and we asked him this because suddenly there was actually a Fed funds futures bet in the markets that there would be a 75 basis point cut in September, one of these jumbo supersize me rate cuts. And then there was to talk about whether we would see an emergency intra meeting cut before September. And here's what Mohamed said about that prospect of an emergency rate cut, and then I'll have you respond.
I think it would be a terrible idea. And those who are pushing it, be careful what you wish for. You don't want the Fed to come out and say it's an emergency. It's not an emergency. This is a market correction that has its roots in the fact that we are over-optimistic about the market, about the economy, and the Fed is late. Yes, we understand why this is happening, but that doesn't mean that the Fed should swing the other way with an emergency cut.
Scott, now you don't see any bet of a 75 basis point cut today.
No, and Liz, Mohamed was absolutely spot on, and you and I have actually talked about it on this program here, where I have said be careful what you wish for. If the Fed came out and did something, that would actually spark massive panic in the marketplace. I don't believe the market needs that. Yesterday, it was one of those one-offs. It wasn't even a black swan. It was one of those one-offs, volatile days. Listen, over the last almost 100 years, the market has experienced 5% pullbacks on an average 3 times a year, 10% pullback once a year. So this was not out of the question. Now, what happens going forward from here? Anyone's guess. If you look at the VIX futures, we're still in a state of backwardation, meaning that even though we're down just dramatically, over 50% from where we were yesterday, futures are lower than where they are today, than where the spot is, meaning that the risk to the market, at least according to what the VIX is saying, is here and now, the present over the next week or two.